movers. This is The Pulse.
Good morning. Welcome to The Pulse. I'm Anna Edwards in London. Francine Lacqua is with us in Aix-en-Provence, as we just saw. More from Francine on the ground in a moment. Let's go back to the big macro story of, well, the week, arguably. US hiring has slowed sharply in the month of June, even as the unemployment rate fell, curbing some of the momentum in the jobs growth this year. The Trump administration, however, is remaining positive about the overall performance of the US economy.
I think this is a really strong, healthy job market, and that this was a little bit on the other side of expectation, but the trend over 3 or 4 months is consistent with our view that, again, that we were growing about 3% and that we're going to have a better second half of the year as those factories turn on the lights.
Let's bring in Bloomberg Markets Today editor Morwenna Coniam to give us the market's perspective on this. Good morning to you, Morwenna. So we've got the positive sort of political spin, I suppose, from Kevin Hassett there. How are markets seeing these numbers? The big thing seemed to be a pushing out of expectations around the Fed, and it was positive for risk assets.
Absolutely. We saw a rally in treasuries with yields coming down, particularly at the shorter end of the curve, which is more sensitive to rate hikes. What we really saw was a paring back of bets on when a Fed rate hike would happen. There is still one expected this year, but that's now looking potentially not until December compared to October. And in terms of the actual next meeting, which is this month, we're only seeing about a 20% chance now, down from about a 30% chance of a hike. So there was quite a significant shift, and it was a shorter day for Treasuries yesterday. So that does also potentially, skew, I think, the reaction. We saw the dollar weakening, and that's still the case today as well.
Yeah, and thinking about what it means to the Fed then, so there's that pushing out of expectations around a Fed hike. Is this a challenge for Kevin Warsh, or this is actually maybe what he wants to see? He doesn't want to see an overheating labour market. He doesn't want to see that pushing up inflation any further, perhaps.
No, it's definitely quite reassuring, because the concern had been that things were heating up too fast. I think oil prices also do play quite a significant part in this. They've really eased off and that's reduced the inflationary pressure. That makes it a lot easier to justify not hiking, which I think with all the political pressure on the Fed as well from Donald Trump at the moment, that is probably quite advantageous. I think it makes it easier to say that the economy is growing, but steadily. There's nothing we need to do here, and I think that probably makes it easier for him. It was overall quite a good report for him, if not necessarily for the labour market, particularly younger people in certain pockets where we did see an actual slowdown.
OK, Morwenna, thank you very much. Bloomberg Markets Today editor Morwenna Coniam on the data picture out of the US. Sticking with news flow stateside, Bloomberg understands that the US President Donald Trump and his allies are renewing a push to reshape the Federal Reserve. Top officials have been actively exploring ways to remove Fed governors to clear the way for the president's own picks. The Supreme Court recently blocked an attempt to fire Governor Lisa Cook, but she is still apparently a target.
Get her off.
How would you do it at this point?
By winning the case. They sent it back, not based on the merits, they sent it back on process and procedure. So we'll start the process, and we'll do perfect process and perfect procedure.
We're joined now by Bloomberg's chief Asia correspondent here in London, though, Ros Matheson, and keeping an eye across all of this global news flow. Ros, good morning to you. So what is driving President Trump's efforts here? He's wanted to reshape the Fed. He's got a new Fed chairman in the shape of Kevin Warsh, but he seems to think his job is not yet done, despite what we heard from the Supreme Court this week.
Well, that's right. And we also know that Donald Trump doesn't always like to let certain things go. And he's certainly got a particular view when it comes to Lisa Cook and also to Jerome Powell, who he believes should be vacating the Fed entirely. And he does still want to reshape the Fed further. He wants to look for further opportunities, further vacancies to potentially look to install or try and install people who he feels might be more amenable to his view about where interest rates need to be. And again, as we're just hearing, like he wants those lower, all the time, despite whatever the economy or inflation is saying. So he still wants to find a way to try and get rid of Lisa Cook. He says he's going to look for different avenues to do that. The reality is whatever happens is still going to run into those legal challenges. It's going to get bound up in the courts again. But he's looking for any way to continue to build the Fed into what he wants it to be. And that's really about looking for ways to remove people he thinks might be roadblocks to that.
Yes, and putting his own people in. So do we have any understanding, Rosette, of who the people are, the types of candidates who might be successful in getting these jobs at the Fed if and when they become available? I think I was reading the Treasury Secretary might be scouring for candidates.
Well, that's right. The opportunity here is at the Atlanta Fed, so one of the regional Fed jobs, and who's going to be installed there. Of course, in theory, the regional Fed presidents are appointed by their local board of directors with sign-off from the Fed board, so they're a bit removed from that centralised process. But obviously, we could see that the nominations for that, the candidates, were being interviewed at pace until about May, and then things slowed down. So now Kevin Warsh has come in, and it's going to restart. So perhaps with his careful eye on who they might be looking at. We know they've interviewed a ton of candidates for it. Rebecca Patterson from the Council of Foreign Relations, for example. Michael Summerlin, who was an advisor on the economy under the Bush administration. We know from our own reporting there's a sense they want someone with a corporate background, someone who comes from business. Perhaps they think they might have a more amenable view again about where interest rates need to be. But obviously what they've done is they've slowed it down to allow Kevin Warsh to come in. Now he's in. He's going to be keeping a particular eye on this, obviously, in terms of who might be suitable.
OK, Ros, thanks very much. Bloomberg's Rosalind Matheson with the latest on the reshaping of the Fed. Let's put all of this together and think about where we are on global stocks. Stocks rebounding after the sell-off this week. That's the story of the moment, the story of today. We're joined now by Kokou Agbo-Bloua, who is the Global Head of Economics, Cross-Asset and Quant Research at SocGen CIB. Nice to speak to you, Kokou. Very good to have you on the programme. So I wonder where this leaves us this week, what we've learned in terms of the stocks picture heading into the second half of the year. Do we feel a bit more positive about it after pushing out expectations of rate hikes, or is that not material to your view? What have you learned this week?
I think this week has shown how resilient the market has been. And if you look at the Kalecki equation, it says corporate profits is equal to budget deficit, business investment, plus net export minus household savings. All of these are essentially pointing to the right direction in the U.S. You have the OBA, the One Big Beautiful Bill, etc., the capex investment on AI, etc. So they are pointing out to a pretty an interesting boom, not of prices, but of earnings and profit margins. And I think the market is simply catching up to this incredible alignment of stars in the U.S. equity market.
And you think that is still the story out of the U.S.? Because we've been watching how hyperscalers have underperformed other stocks. Certainly, it's become a more global narrative, hasn't it, where the gains of AI will be accumulated. You just have to look at the gains that we've seen on memory companies in South Korea to see that. But you still then are positive about the tech story in the US.
Absolutely. I think the AI theme is broadening. So if you think about the numbers, you have $800 billion being invested in capex to build data centers. But if you have to think in terms of the global TAM, so the total addressable market for AI. So some quick estimate, rule of thumb numbers, the global GDP is around $120 trillion. Total labor income share of GDP is roughly 50%. So that's $60 trillion. And if you think about jobs that AI can disrupt, so this is knowledge workers, is 30% of that 60 trillion. So $18 trillion. So let's assume AI has 10% market share. That would be $1.8 trillion to be compared with the $800 billion. So U.S. companies have had a long time where they were doing share buybacks and dividends, etc., not doing any capex. And now they're going through a process where the return on invested capital of this capex is higher than their cost of capital, and the market is assuming that will pay off in the next couple of years. And you can already see that. If you look at agentic AI being more token intensive, etc., etc.
Okay, so we can tell a positive story about how AI is going to boost productivity. Maybe it takes out some jobs, but if it takes out as many jobs as you just suggested, Kokou, where does that leave an economy that is very consumer driven?
Yeah. So I think Paul Tudor Jones has made this point that I find pretty interesting, is that no man is better than a machine, but no machine is better than a man with a machine. So I think the opportunity for increasing productivity through reskilling people, and you see that with any sort of industrial revolution, the ability to do more and also looking at other use cases, so robotics, autonomous vehicles, et cetera, et cetera. So I think I'm more optimistic on the ability of the labor force to reskill itself. And let's not forget one thing. There's a risk if you take the human out of the loop of compliance, legal, regulation elements, and ultimately having the human in the loop is something that will make sure AI is used productively at sort of societal level.
OK, I was devastated for a moment. I feel much better now. Kokou, thank you very much for that. So let's go back to the broadening story. There are lots of ways you can think about broadening or rotation. You can think about the AI trade broadening and rotating into other parts of AI, or you can think about broadening market gains in completely different sectors. But still there might be an AI dimension, like healthcare, for example, areas where Europe can do pretty well. So how do you think about the broadening benefits beyond the sort of initial first mover gainers?
I think the broadening benefit is essentially being expanded in industrials, the material sectors, energy, for example. The renewable angle is also something that is booming in the sense after what we've gone through with the Strait of Hormuz. I sort of think that this is, if you look at small caps outperforming large caps, you see that phenomenon. Europe is also a great opportunity given all the need to invest in its autonomy. If you look at the Letta and the Draghi report, these are mega trends that are not going to stop in the short term. So, I mean, to sort of conclude, you could think of the quote by the great philosopher Rocky Balboa, who said, it's not about how hard you hit, it's about how hard you can get hit, but keep moving forward. And this pretty much is the lesson of risk assets over the past sort of 2 years, from the tariff debacle to the Iran situation, and yet we're still powering forward.
Is there a boxing metaphor in investing? You have to be light on your feet, I suppose, right now. Is that important?
Absolutely. This is the Muhammad Ali angle, so float like a butterfly and sting like a bee. But my favorite one is Mike Tyson. Everyone has a plan until they get punched in the face.
Yeah, that seems really appropriate right now. There are so many plans being punched in the face by AI and the fast developments that we are seeing there. So all of that sounds like there's lots of opportunity in it, Kokou, for investing, and you've been through some of those. Are we going into a higher interest rate environment, a higher inflation environment, and does that threaten to undermine any of the exciting investments of the future that you might be thinking of?
Yeah, so I think growth is diverging across countries, but there's a common theme around inflation that is sort of uniting all of the central banks. So you could see the ECB raising interest rates. The probability of a second hike by the ECB in September is down to 40%. The US was close to 50%. Now it's down to 40% because there was this argument that Kevin Walsh made that AI could sort of reduce wage inflation, but it is inflationary in the short term. So I think inflation is clearly above the central bank target. And I think it will ultimately depend on the situation in Iran with the US.
Yeah.
The metaphor I like to use here quickly is the three-body problem, which is a problem in physics. So you have two planets orbiting against each other. You have a perfect predictability. If you have three planets with gravitational pull, it is called deterministic chaos. It's unpredictable. So this is a metaphor for US, Iran, and Israel with the Lebanon situation, etc. So within the next 60 days, we'll have to see if they find an agreement on uranium or the toll fees on the Strait, and whether we have the risk on the Strait of Bab el-Mandeb, which is at the bottom of the Red Sea with the Houthis in Yemen, etc. So the situation remains highly unpredictable.
It does, and that's one area of potential volatility. I guess I was asking about inflation because I was also thinking about an increasingly regionalised world.
Yep.
Is that also part of the AI narrative, or just the global paradigm that we're in right now?
That's a very good point, because there's a sovereignty element on data centers for countries. So Europe has to have its plan. Asia is going very fast, the US obviously. So I think if we get more deglobalization, then you lose the sort of economies of scale that globalization has brought so far. So this is clearly one of the risks, and we'll have to see how central banks respond to that.
OK, Kokou, thank you so much. Really thought-provoking stuff for a Friday. Kokou Agbo-Bloua from SocGen, Global Head of Economics Cross-Asset and Quant Research. Coming up on the programme, Philippe Aghion will be with us, who won the Nobel Prize for Economics for his work on creative destruction. Wondering if he's just listening to that conversation. We will discuss the future risks to global growth with him next. This is Bloomberg. This is The Pulse. I'm Anna Edwards in London. Francine Lacqua is on the road. Let's get to her in a moment. She's thinking about the ECB because fresh from their difference of opinion on future rate hikes at the ECB symposium, central bankers and policymakers are in France and they're gathering at Aix-en-Provence, the economic forum that takes place there. Francine is amongst them and she's back with us now with the guest. Francine.
Anna, thank you so much. We are here at Aix-en-Provence for the Rencontre Économique, and I'm delighted to be joined by Philippe Aghion. Of course, he is a Nobel Prize-winning economist. Mr. Aghion, thank you for joining us. As
Very
always,
nice to meet
we're going
you.
to talk about tech, we're going to talk AI, but actually, what do you see symptomatic as a concern for Europe? We worry about inflation, but actually what happened with the Strait of Hormuz has limited inflation, or it's coming down.
Yeah, of course. I never thought that Hormuz would trigger the equivalent of the global financial crisis. I knew that it would induce a small increase in inflation and a growth slowdown and a slowdown. And that's what it did. I mean, of course, when the price of oil goes up because you have the Hormuz crisis, of course, it means that the production costs go up. And production costs going up, of course, price go up. I mean, that induces inflation automatically. And it induces also a reduction in growth because both on the supply side, the input costs increase,
right.
and of course, and you don't get as much oil as you need, and therefore production is somehow disrupted, and also people have to spend more on gasoline and petrol and less on other things, and so so that of course depresses the demand, and
right.
those forces. Concur to reduce growth a little bit. But I never thought it would go beyond 1% increase in inflation or 2% and a 1% decrease in growth rate. You see what I mean? And that's exactly what happened. And now that you had some kind of an agreement, even if it's not a true a complete agreement, inflation will go down and growth will slightly resume.
Monsieur Aghion, talk to me a little bit about AI and tech. This is what you're known for. Are you worried that actually it will reshape our economies, especially in Europe? What does it mean for productivity and jobs?
Alors first, you have Europe. It's clear that after a period of catching up between 1945 and 1985, per capita GDP of Europe was catching up partly with US per capita GDP. But then since the late 1980s, again, Europe is losing to the US. Because the US, they went into high tech, they went into the biotech and the IT revolutions, and Europe failed to enter those revolutions. We remain stuck in mid-tech incremental innovation, and that's why we lost to the US, okay? But
Can we catch up?
And AI is an opportunity for Europe to resume growing faster. You see what I mean? But we need growth. AI has a high growth potential because it's easier to produce goods and services. It's easier to produce new ideas with AI. And now that we need to harness this power. So we need a true industrial policy in Europe. Europe has, in the name of competition policy, Europe has precluded industrial policy. We need to go really fully in industrial policy, defense, AI.
But Europe doesn't have the hyperscalers. Europe doesn't have the LLM models. So how can Europe actually harness the AI compared to the US that seems to have everything?
Well, I will tell you what we have. I mean, Europe, first, we have a lot of savings. You know that there's much less saving in the US. We need to make sure that European savings are invested in large part in Europe, okay? We have talents. We have very good mathematicians, researchers, a lot of breakthrough innovations worldwide, cite European research. We have cheap energy. That's very important. In France, we have, nuclear energy. That's great. And we have very cheap energy. So we have values. We carry democracy and freedom more than the US, and we have a better social model. AI will mean job creation and job destruction. You need a good flex security system to accommodate that. In Denmark, when you lose your job for 2 years, you get 90% of your salary. The state restrains you and helps you find a new job. We are much closer. We are in Denmark, but other European countries who are closer to Denmark than the US is. And so we have a social model as well that will better accommodate the job creation and job destruction induced by AI.
Monsieur Aghion, you've been, of course, one of the closest advisors to Emmanuel Macron as president over the last 10 years. We're looking at French election. in April of next year. What do the French people want when it comes to fiscal and also taxes?
Now, what the French want, I will tell you what they want. They want to make sure they are part of the process. They know we face challenges, the AI, the new geopolitics, the value chains are being reshaped, the resilience becoming the driving force of value chains now worldwide. They know that they have to face this challenge, but they want to make sure that it will be all together, that nobody will be left out. So you need a new de Gaulle. You need someone who will say, look, you know, education, no matter your social origin, you will get good education, good health. If you lose your job, we are there to help you, retrain you, help you find a new job. We need industrial policy, we need sovereignty, and that's the Gaullian agenda. We need a new de Gaulle.
But who is that? Who is that person?
Yesterday, the Prime Minister spoke like a new de Gaulle.
You believe that?
That's what other people see. I can't say he's the only one, but yesterday was a very important moment. Yeah. He never said he would be a candidate, but he spoke like a new de Gaulle.
Mr. Aghion, can you actually, have growth and think about growth differently with all of the policies and all of the investment in education, whilst at the same time actually sticking to the rules that the EU has set?
I will tell you, the EU has to change its economic doctrine. We used to say, well, deficit should not go beyond 3% of GDP, putting in the same basket pensions spending and investment in growth. We can no longer do that. We have to adapt to have new way to implement the Maastricht Treaty. Second, in the name of competition policy, we precluded industrial policy, sectoral state aid. We have to stop that. We need DARPA. We need the equivalent of the American Defense Advanced Project Agency in Europe. And we need to have an industrial policy which is in line with competition policy. We can reconcile the two. And three, we need the savings. We need to make sure that they will be invested in Europe. We need more venture capital, more institutional investment, and more long-term funding of research, of basic research. Those things we need. And that gets you to Draghi, to Letta, and to the Bocconi report.
Are we closer to, very quickly, are we closer to actually putting some of the things that they put in their reports?
I will tell you something. I don't know if it will be done. Well, there is the 28 regime, all the discussion on the 28 regime, which is, I think, very positive. Anybody wants to do a new kind of unicorn can benefit from a regime which is the 28 regime, not go through all 27 regulations, country. And then the other thing is that I believe that a lot will happen with coalition of the willing. You will have countries that are leading the game. France has to be among the leaders. I can see Germany, I can see the UK, because the UK wants to get back to us. Maybe Sweden, maybe some Italy, I hope. But it has to be a coalition of the willing, to have joint DARPAs, to have joint institutional investors, to have joint markets for high tech. To give more to the European Research Council so that the European Research Council can fund labs, not only individuals. And that I think we can do. I'm very optimistic.
Philippe Aghion, thank you so much for your time today. That is it for now from Aix-en-Provence. Anna will be back. And of course, we're speaking to the Veolia chief executive. And then we have the big exclusive interview with the new Banque de France governor.
Francine, thank you. Francine Lacqua there with the Nobel Prize-winning economist Philippe Aghion. As she says, she will be back shortly. She'll be speaking to the Banque de France governor, also speaking to the CEO of the French utility Veolia. I see utility stocks, the best-performing sector in Europe today, as European stocks make modest gains up by 0.3% on the Stoxx 600. We'll be back with more from Aix-en-Provence shortly. This is Bloomberg. Good morning. Welcome to The Pulse. Welcome back to The Pulse. I'm Anna Edwards in London, and these are your top stories. Stocks rebound after 2 days of a tech-led sell-off as traders trim bets on Fed rate hikes after a weak US jobs report. Bloomberg understands that President Trump and his allies are renewing a push to reshape the Federal Reserve, with Governor Lisa Cook still a target. And Bloomberg learns that some European countries have accepted that ships transiting the Strait of Hormuz will now have to pay fees to Iran and Oman. Now, the French Finance Minister, Roland Lescure, has told Bloomberg that he will push for a finance bill for next year that brings a further improvement in the French public finances. He was speaking at the Aix-en-Provence Forum with Bloomberg's Caroline Conan.
We must have a budget, because the alternative is not really a go. If we don't have a budget, we have what we call a special law, which more or less freezes the budget compared with last year. That means that spontaneously the deficit is going to increase, and spontaneously we're not going to be able to put more things in action, more policies that are going to be pro-growth or pro-business. So, yeah, it's not an option. We have a hung parliament, as you know, 11 different political groups, so we have to convince a majority to vote it. I think that reason will prevail. I know that some of those guys see themselves as a president. I don't think they want to inherit a situation that would really lead them to waste their first year. They probably want to be efficient. They probably want to be able to correct the budget if they don't like it. So the most likely, I hope, scenario is we have a budget, it's not perfect, but we've managed to vote it, and then debate can happen for the big election.
But we've seen obviously what happened to the former Prime Minister the past couple of years, Michel Barnier, François Bayrou, both ousted because of the budget. Are we going to see a similar situation? Can you actually cut the deficit at the moment, given we still have a fragmented parliament?
Well, we did. We did last year. As you know, we were 5.8 in 24, 5.1 in 25. This year is more difficult because we've had a crisis. Hopefully it's over. But the Iran crisis had a big impact on growth, on inflation, and very likely on public finance. We're having a big meeting next Tuesday. We call it the Alert Committee with all the stakeholders, so parliamentarians, trade unions, company representatives, also the representative from local authorities to discuss this. We want to assess the state of the economy, assess the dynamic of public finance, and hopefully commit everyone to making the efforts we need to do to keep public finance under control.
So what's your target for deficit cuts next year? Because this year obviously targets 5%. Are we going to reach that? And next year, what is the target?
So we're going to do everything we can to reach, or to be as close as possible to 5%. We're still in the midst of assessing the impact of the crisis. There's lots of uncertainty. I think the third quarter is going to be key. As you know, inflation has receded in France and elsewhere in Europe. You know, this is the time for recovery. And I hope that households, companies, everyone's going to just get together to make sure we have growth. And if we do have growth, hopefully we'll have a better outcome on public finance. But it's still very uncertain. I want 5%, and I hope we will reach 5%.
For next year?
For this year. And I want to make sure that next year we have a budget that brings us below 5%. This is still in the air. We have to work on our budget. This is the work of this summer. We're going to present it by September. But this is what I like to have, and this is what I hope we're going to have.
The French finance minister there, Roland Lescure, with his hopes for the French economy. Let's stick with the coverage from Aix-en-Provence, where Francine Lacqua is standing by again with another guest. Francine.
Thank you so much, and I'm delighted to be joined by the Chief Executive Officer of Veolia, Estelle Brachlianoff. Thank you so much for joining us. Look, I mean, there's a lot to talk about: inflation, energy. I also want to talk about biomethane. But if we start with the record heat wave that we've seen across Europe, what does it mean for your company?
I guess, you know, this is quite striking that probably today the temperature in London is higher than what we have in Aix-en-Provence, which means that, you know, the entirety of Europe is realizing that climate change is happening, and it's not just something in the future. We live it in our blood, unfortunately, and in our flesh. So which means that the big debate is not only about how do we fight against climate change, but as well how do we adapt to climate change. And adaptation to climate change, there is a very quick jump into water, because this is the first consequence of climate change. It's on water. Drought followed by floodings at times, you know, extreme events, and that's exactly why we have to cherish water. And probably one day we can get rid of oil, but probably not of water.
But when you look at water and actually water demand for Veolia, do you see that increasing significantly already in the next couple of quarters, or will it take longer?
Oh, it's very immediate, you know, when you have a big, you know, like heat wave, you know, people consume more water, but it's the same for agriculture, irrigation, for instance, and same for industries in the same time. That's why what we do is try to avoid as much as possible to have to limit and restrict the usage of water. And that's why cherish water, it means what? It means avoiding waste. wasting water, and finding new sources of water, regenerating it, recycling wastewater, for instance. So we have a series of solutions we can develop. They are ready. We know it works. We've learned them from the south of Europe, and now the northern part of Europe is learning how to live with those heat waves and adapt to climate change.
Talk to me a little bit about inflation, because we've seen this, of course, massive war between the U.S. and Iran that led to inflation going up because of the price of energy. Does that complicate your life a lot?
So I would start with making the link between your first question and the second one, if I may. The Strait of Hormuz and war in Iran. The first thing is, we are very present in the Middle East, in particular because we are the leader worldwide of desalination technology. So we operate a lot of plants in the Middle East, and they are a critical resource in the Middle East, where up to 90% of the water comes from desalination, seawater desalination. So they are protected with Patriot missile around them. So we have to visualize it. This is not abstract. Water is absolutely a critical resource. And it is the same in Europe, but of course in the Middle East it's in this one. When it comes to inflation, Veolia is very protected because we are, one, a multi-local company, so we are present in the Middle East, but in 45 countries, and two, our contracts are very well, indexed. So the higher the cost base, at one point we're reflecting back into the cost we charge to our customers.
It's going to be a big 12 months for France going forward because of the presidential elections.
I thought you were talking about football. Sorry.
I mean, football, yes. And most of us are behind France, although I shouldn't say, because I'll get the wrath of many, many other guests. But when you look at a lot of the presidential candidates that are here actually in INEX, what do French companies need?
The first thing is some type of stability and vision, which is what all companies need to invest in France and in other countries. Then invest in the future, so invest in infrastructure to make our country more resilient, to make our country even less dependent from importing things. That's why, to be able to recycle water, to be able to recycle strategic minerals, to be able to find new sources of energy locally as opposed to importing fossil fuel, all that contributes to strategic autonomy. So I guess I would have a wish for the presidential election that securing critical needs is in the agenda of the various candidates, because it's absolutely critical for the country to thrive, for the economy to be competitive, and even for the defense in a broader sense.
How much do you worry about deficits?
Deficit, of course, is a big subject, and it should be. But I would distinguish between the debt, which is here to pay, in a way, operating costs, as you would say it in a company, which will be social expenses, versus the debt, which will be here to invest in the future of the country, in education, in critical infrastructure, like I said. And I guess, we should have a different type of approach of the two types of debts, because, one will bring wealth and competitiveness over the long term, and it's absolutely critical to invest in that as well as in innovation and AI, for instance.
But do you think this is one of the main pillars that actually will decide the next French election, or will it all be immigration and other matters, more social matters?
I guess I was told one day by non-French people, you French are only about politics, never about the economy. And usually we have some type of striking back to, yes, the economy is stupid. I don't know if France is like that, but there will be probably a lot of debate about the economy, the debt. But in my opinion, it should be a lot about where do we invest, as opposed to only how much we invest and how much can we afford it. Where do we invest? Again, to secure the future of the country.
Talk to me a little bit about biomethane. So this is one of the big hopeful things that actually France and other countries should get in, but it's not viable without government subsidies.
This is a very good example. When I say strategic autonomy and securing critical resources, energy, we don't have any, oil and gas in France. So we import, in particular, some fossil fuel, but there is a lot we can replace by local source of energy. Biomethane that we produce out of waste and wastewater is one, and a lot of bioenergy which can locally be sourced. Right. This is a reservoir which is largely untapped, not only in France but in Europe. At the European scale, it's 400 gigawatts. 400 gigawatts, just to give you an idea, it's 400 nuclear tranches, so it's massive. and it's a third of the import which we could replace by this type of energy. So what does it need to be happening? We need a clear vision at a country level of, we want to develop, say, 10, 20% of biomethane in that case in the next 5 or 10 years, and have a stable vision over the various governments which can change, and a little bit of subsidies, but it's more a signal, political signal, which will be stable over the time than only public money. Usually you can go without public money if you have a stable signal, an economical signal, a price one, for which is stable.
But are you confident that this is that direction will be taken?
I'm a fighter and optimistic at the same time. I'm not an optimistic by definition, so I always fight for what I believe should be, like the priorities.
Thank you so much for joining us today. That was, of course, Estelle Brachlianoff, the Chief Executive Officer of Veolia. With that, Anna, I'm going to send it back to you in London. It definitely has a bit of an economic festival vibe here in Aix.
Yes, I guess that's, Friday in the sun. Francine, thank you very much. Francine Lacqua there with the Veolia CEO, and they were talking there about energy prices, which takes us on to the next conversation very nicely. Bloomberg has learned that some leading European powers now accept that ships transiting the Strait of Hormuz will have to pay fees to Iran and to Oman. The US and Gulf Arab countries continue to insist that Iran and Oman cannot impose charges of any kind for the Hormuz Strait. Let's get now to our Bloomberg Horizons Middle East and Africa anchor, Abir Abu-Omar, who's got the latest news flow on this subject. Abir, good morning. So why do some countries think that fees are inevitable? Why is the European contingent kind of coalescing around that view?
Good morning, Anna. Yeah, I mean, they seem to have fallen in line with what Iran has been saying over the past couple of months or so. Iran has been adamant on establishing these tolls once the 60-day period of negotiations with the United States is over. And so these countries behind closed doors, this is a Bloomberg scoop from yesterday, suggesting that countries in the EU, but also Gulf Arab countries in the region, have kind of succumbed to the fact that this will be the new reality, the new paradigm of the Strait of Hormuz is going to be tolls established once the negotiations are over. What we know from our sources is that countries in the EU, or some countries in the EU, are at least telling the Omanis and the Iranians to not discriminate against ships based on their nationality. Gulf Arab countries and the leaders there in public are opposed to this toll or this system that will start charging ships. But behind closed doors, they also are discussing this new mechanism that will probably see charges coming out of their ships and tankers. And you could really see countries in the region, the richest ones in the region and the biggest oil exporters, Anna, Saudi Arabia, the United Arab Emirates, doubling down on other shipping routes. That includes the Red Sea for Saudi Arabia. That includes the port of Fujairah up north for the United Arab Emirates. And it really just goes to show that Iran has said over the past few months, again, that it will toll the Strait of Hormuz, that it wants to do it with Oman. But if Oman does not agree to the terms that Iran sets out, then Iran said that it is going to do it with or without the blessing of the Omanis. The U.S. obviously, on the other hand, says that it is completely unacceptable to toll the Strait of Hormuz. But we haven't seen a lot of pushback beyond that from Secretary of State Marco Rubio, Anna.
OK, we'll see if we get that then. Abir, thank you very much. Bloomberg's Abir Abu-Omar in Dubai. Now, President Trump has said that he will, quote, handle Cuba after Iran. Washington has maintained a blockade on Cuba since the strikes. But the campaign has been ramped up under President Trump, with the island nation suffering widespread shortages of fuel, food and medicine. Bloomberg Originals has been looking at whether Cuba's authoritarian government will bend to Donald Trump's will.
What's coming next for Cuba? Capture and kill is still an option?
I just can't tell you that. We've got options all over the map.
Perhaps no other nation epitomizes Cold War politics more than Cuba.
When you look for a country that's, let's say, punched above its weight on a global stage, Cuba should be on the list.
Cuba and the United States, by default of their geography, have always had some kind of economic relationship. When we had prohibition in the United States, Cuba became a haven for American tourists.
Cuba is just 90 miles south of Florida. It's in the heart of the Caribbean. It's been seen as kind of a strategic platform for U.S. rivals.
The U.S. has had a broad trade embargo on Cuba since shortly after the revolution in the 1960s.
Cuba is ruled by a single party, the Cuban Communist Party, and it controls the legislature, controls the military, controls all facets of society.
But the socialist idealism that birthed Cuba has ground to a halt, literally running out of gas.
There is a dire jet fuel shortage in Cuba as the U.S. is moving to cut off the country's oil supply.
Crippling blackouts and a teetering economy have sparked unrest on the island.
We have an unprecedented degree of suffering on the island.
The Trump administration has taken a hard line.
Cuba has always posed a national security threat.
Tonight, the Justice Department unsealing an indictment against former Cuban President Raul Castro.
Will Castro actually face this prosecution?
The message the indictment sends to the Cuban government is that the U.S. is serious.
Amid the upheaval, many are looking for change, and some see opportunity.
Realmente me gustaría que Cuba pudiera realizarse.
2 million plus Cubans that live abroad. They have a genuine desire to see their country prosper and the people prosper and move forward into a different direction.
Some highlights there of a documentary. Subscribers can watch that full documentary right now on the Bloomberg terminal or Bloomberg.com. Coming up on the programme, how the Ukraine war is hurting Russia's space ambitions. We will have more on today's Big Take story next. This is Bloomberg. This is the Pulse. I'm Anna Edwards here in London. Let us talk once again about private credit. Private credit funds are facing a relentless wave of investor withdrawal requests, forcing managers to trap over $14.5 billion of capital to protect their portfolios. For more, we're joined now by Neil Callanan, who leads our private companies coverage here at Bloomberg. So bring us up to speed with what is the latest then here, Neil. We've got these private credit funds facing, this is now the second quarter of demands for their money back from investors in these private credit funds, and they're trying to hold the line. So what's the latest on this story in the second quarter?
Yeah, it's more of the same, really. Managers had done a great job in the last few years of asset gathering. They had convinced people that it was a great time to allocate money to private credit through these BDCs. And what we're finding is a lot of that money is hot money. It's not money that's used to being in products like this. And it's seeing the headlines about AI and what's going to happen with software and panicking and trying to pull money. And that's a continuation of what happened in the first quarter. But it now looks like, similar to what happened post-Brexit with property funds in the UK, that this is going to be a 2-year story at this stage in order for people to make those redemption requests and meet them over time. OK,
so you've got these big redemption requests coming in, and then as a result, you see gating and companies say, no, you can't have all that back. It's going to take 2 years, not just 1 quarter, to return all this money, if that's what you... So that's the latest thinking. So are there funds then, private credit funds, that are handling this better than others? The ones who are maybe not facing such high redemption requests, not having to gate the funds? Where's the outperformance? Yeah, we're really going to start to see manager differentiation in terms of the performance now. So the people who went heavily into software, we're going to find out if they made the right decisions on those loans and whether their returns are going to justify the risk they took. Obviously, because these are credit, all the equity has to be wiped out before they start to take losses. So then you're really starting to see how badly things can go within this sector. But at the same time, there are managers who have not had the same level of requests as other managers. So you have the contrast between one of the Blue Owl funds, which is very software focused, where redemptions are at 38%, whereas some of the likes of Oaktree and Goldman Sachs, their funds have fallen below the 5% threshold. And that just shows you that the retail market is not homogenous, that there is big differences between that money. Goldman obviously had a probably more diversified portfolio than many of them. And then Oaktree, its reputation over the years has been that it's a steady investor, and then it does well in periods of dislocation and volatility, like now, and that it's a counter-cyclical investor. So as you would imagine, they seem to be doing better in terms of the redemption requests, at least for now. And I suppose all of this really hinges on the underlying credits involved here and whether the software sector is going to be eaten up by AI or not. And that's still, you know, there's a lot of different thoughts out there and some differentiation to be done within the sector, perhaps.
Absolutely. What we're seeing is some of the BDCs are having to sell loans to get liquidity, and some of those loans are finding buyers at very good prices comparatively. Slight discounts, but not massive discounts. But the fear around that is that they're selling off the good loans first because there's a market for that, and what's left is going to be worse. And that's why, again, it may take 2 years before we really see the full outflow from this.
OK, Neil, thank you very much. Thanks for joining us. Neil Callanan, who leads our private companies coverage here at Bloomberg. Now, as mentioned ahead of the break, Russia's efforts to create its own version of Elon Musk's internet satellite network, Starlink, is the subject of today's big take story. Some 6 years after SpaceX began launching its network, Russia's first batch of satellites finally went into orbit in March. But by June, one of them had reportedly already failed. President Putin called the initial launch, quote, absolutely insufficient. And soon after, the Russian leader's plans for space possibly suffered another blow, with Ukraine announcing an attack on a space communication centre near Moscow. So far, so complicated for the Russian space journey. Let us bring in Bloomberg's Tony Halpin, who leads our Russia coverage and can give us some details on this big take story then. Tony, it's a complicated story, an interesting deep dive into the space sector. What are the challenges then facing the director of Russia's space agency? Let's put ourselves in his position.
Yes, I mean, Dmitry Plekhanov is very young for this environment. He's just 40 right now, and he leads an agency which has a history of firsts. You know, during the Soviet period, it was the first satellite in space, the first man in space, the first woman in space. But in recent decades, Russia has fallen far behind, and it's his task really to try and revive those glory years by doing things like emulating Musk in low orbit satellites, by trying to find ways that Russia can get reusable rockets to launch satellites, and to engage in projects like deep space exploration, which is years behind. But it's a huge challenge. I mean, just as you've noted, the Starlink model that he's following, there are more than 10,000 Starlink satellites in Elon Musk's network, and Russia currently has launched just 16.
OK, so yes, so perhaps some more political pressure then on those in this sector coming from the Kremlin. How much is Russia's war in Ukraine affecting the space ambitions that Russia has then?
Yes, it's having a huge effect. I mean, quite apart from strikes on infrastructure that you mentioned, the fact that they're even talking about and building a low-orbit satellite network is largely driven by the fact that Russia doesn't have that. It's been piggybacking until recent months on Starlink, and when that network was switched off, its forces on the front line were left severely handicapped, and as a result, they've tried to accelerate this program. They're years behind on things like reusable rockets. That's been important because they've lost an awful lot of customers for whom they used to launch satellites rather cheaply as a result of the war. So they're facing a funding crunch, a technology crunch, and that's made all the more difficult by the kind of isolation that they're experiencing because of the war.
Tony, thanks very much. Thanks for the update. Bloomberg's Tony Halpin with the Big Take story. And you can read the full Big Take story on the Bloomberg terminal. Coming up later from X, we've got an exclusive interview with the new Bank of France governor. That's Emmanuel Moulin. He'll be speaking with Francine Lacqua for his first TV interview since taking office last month. That conversation is at 10:20 a.m. UK time, so in around 25 minutes' time. Let's have a quick, as we bring this hour of programming to a close, let's have a quick look at where we are on the European equity market story. We are entirely flat, giving up some of the earlier gains. Pretty evenly divided between sectors going higher and lower. Utilities, autos and parts, those are sectors going higher. A diverse range of sectors up to the upside today. We do see a bit of underperformance by the French market, down by 0.2%. Up next, Bloomberg Brief. Have a good weekend, everybody. This is Bloomberg.